So let us go ahead and take on another example on corporate valuation. Now this example is on something called the comparable firms approach, where I'm supposed to consider the price earnings ratio or price to book value ratio or the price to sales ratio. Using those numbers, I'll try to value the shares of a particular company. Now let us go ahead and take on this example. Again, another important sum from examination standpoint. Now we shall go ahead and take on this example. Yes, Renuka, read the question for us.
True Value Limited is planning to raise funds through issue of common stock for the first time.
You saw that? You're going to come out of the public
issue.
And this is an initial public offering, IPO. Issue of common stock, number, issue of what? Equity shares. Next.
However, the management of the company is not sure about the value of the money, and therefore it attempts to study similar companies in the same line which are comparable to true value in most of the aspects.
Now they are finding it difficult to value the shares of this particular issue. In order to fix the price for the IPO, the company gathers information about similar companies. We say in finance something called the proxy companies. What is that? Proxy company. I take data of those proxy companies, and using that information, I'll try to value my company so that I can price the IPO. Yes.
Yes, sir. From the following information, you are required to compute the value of True Value Limited using the comparable firms approach.
So we represent True Value Limited, and they given the data regarding another 3 companies, right?
Yes,
out there.
sir.
Those are the proxy companies. Just read.
So for the company True Value Limited, sales is 250 crores.
It is given that the sales expected for our company, how much?
250
crore going forward.
And
Next.
for Jewel Value Limited is 190 crores.
Okay, now they given the sales for the comparable firms.
Yeah.
Okay, it is Jewel Value, how much?
190 crore.
190 crore. And then
for Real Value Limited, 210 crores.
Okay.
And for Unique Value Limited, it is 270 crores.
Now these are the data regarding the 3 proxy companies. And what is sales expected for our company?
250.
Is rupees 250 crore. Next.
Next, profit after tax for our company it's 40 crore.
That is earnings after tax expected going forward. How much is 40 crores? And what is the earnings of the other 3 companies?
It's 30 crore, 44 crore and 50 crore.
Okay, 30, 44 and
50.
And 50 crore. Next.
Then book value of True Value Limited is 100 crore.
Book value is 100 crore for True Value Limited. And what about the proxy companies?
It's 96 crore, 110 crore and 128 crore.
Okay. So those are the book values given. Next.
Market value for True Value Limited is not given, and for the other companies it's 230 crore, 290 crore and 440 crore.
See, the market price are not given for True Value because we are trying to price. Now we are trying to list our shares in the market, right?
Yes.
So they given the market price or the market value of the equity shares of the 3 proxy companies. How much?
It is 230 crore for Jewel Value Limited.
Then
for Real Value 290 crore and for Unique Value it's 440 crore.
440 crore. Then
the valuer feels that 50% weightage should be given to earnings in the valuation process. Sales and book value may be given equal weightages.
You know what is the meaning? I'm going to value the shares of True Value Limited using the price earnings multiple. That is the price earnings ratio, and then using the price to sales multiple, or we say price to revenue multiple, and also find the price to book value multiple. So I'm going to value the company shares using all the 3 methods, and then take a weighted average of those values. What are the weights? 50% weightage for earnings, 0.5. And then the balance of 50% is equal 25% for sales and 25% for book value.
Book value.
If people are wondering right now how to value the company, what am I talking? Just it's very simple. Okay, very simple example. And this can come in your examination, CA Final November 2024. Okay, a very important sum from examination standpoint. I reiterate that point. Now we shall go ahead with the solution. What I will do first, I can calculate the price to sales multiple. I can find the price to earnings multiple and price to book value multiple. Then I'll have three numbers for each multiple. For each ratio, I'll have three price earnings ratios, right?
Yes, sir.
For jewel, then for
Real value
real and unique value, right?
Yes.
So I have to take an average P multiple for the industry. So those three companies represent the industry. You must have taken the data regarding the top three players in the market, right?
Yes.
You know, suppose you want to enter into, let's say, IT sector, you can pick, you know, information about TCS, then Infosys, and say HCL. And then try to value the IT company which are trying to float. Got it? Now, please refer to this table. They made columns, okay,
Yes,
particulars,
jewel value, real value, unique value, average.
and the average multiple. Now, what is the first one?
For jewel value, it's price to sales ratio.
First, let's find the price to sales ratio of all the three companies. For example, what is a market value of jewel value?
230 crores.
Very good. Divide that by,
Sales 190.
it is a 190 crore is a sales.
Yes, sir.
So divide 230 by 190, how much you get?
1.21.
What is the meaning? That means the market value of this company is what? Is 1.21 times its sales. That means for every 1 rupee sales, it has a market price of how much? 1.21. That is the meaning of the price to revenue multiple or price to sales multiple. So 1.21 is the ratio for jewel. And then for real?
Real, it is 290 crore market value.
Upon?
210 was the sales.
Sales. How much you get?
1.38.
Okay. And how much you get for unique value?
1.62.
Now what you should do, take an average price to sales multiple. How much you get?
1.403.
That means what? That means you can say that the market value should be roughly how much? 1.403 times, that is what? Into sales.
The sales.
That means in case sales are 1 rupee, you can expect the market value of the company shares to be 1.403 rupees. Understood?
Yes, sir.
So that means the market value is going to be 1.403 times the sales. And then you can take the next ratio. What is that? Price to
earnings ratio.
Earnings ratio. For jewel value, I'll take 230 crore divided by 40 crore.
Yes, sir.
It is 230 by 40. How much?
No, 230 by 30, no, sir.
By 30 is it?
Yeah.
Jewel
The
value
profit
30 crore.
after tax is 30 for jewel value.
Okay, I'm really sorry. 30 crore. Okay, guys. Okay. Just pull up. Okay. So my bad. Okay. So it should be 230 crore
Divided by 30.
upon 30 crore.
It
How
is
much you get?
7.67.
Very good. And then for real,
It is 290 crore by 44 crore.
so how much you get?
6.59.
And then unique.
440 crore by 50 crore. So 8.8.
Okay, now take an average price earnings ratio. How much you get?
We get 7.69.
What is the meaning for every? That means you can say the market price what? 7.69 times its earnings.
Yeah.
For every 1 rupee earning, the market price is 7 rupees and 69 paise. That is the meaning. But the understanding is the market value is 7.69 times the amount of earnings. And then let's find the price to what? Book value.
value ratio.
The PB ratio. PB, price to book value ratio. It is 230 crore by
96 crore.
how much you get?
2.39.
2.39. That means the market price is 2.39 times the book value. You know, book value means a share capital plus reserves and surplus. Put together is called book value. And then what about the second company?
Real value, it is 290 crore by 110 crore.
How much you get?
2.63.
And then third?
440 crore by 128, so 3.43.
And what is the average price to book value multiple?
It's 2.82.
That means I can say that the market price should be
82 times.
2.82 times the book value of the equity, right? As equity means capital plus reserves and surplus. So now we shall go ahead and value
The
true limited. We got to value true limited, true value. Now how to find that? Very simple. What I will do, I'll make another table. We know that what are the first ones in the table, first parameter.
So it is
What are the columns?
particulars, multiple average,
Okay.
parameter, rupees in crores,
Okay.
and then value, rupees.
The market value of the company, likely market value, right? Now what is the first one?
So they have price to sales 1.403 average.
1.403 is the average price to sales multiple.
Yeah.
And we know that the sales are made by True how much? True Limited.
250 crore.
So what I can do, the value, the market value should be 1.403 times 250 crore.
So it is 350.75 crore.
It is 350.75
75
crore.
Then
And then the next one, the price to what?
price to earnings.
Earnings. What is the average multiple you got?
Multiple is 7.69 times.
And what is the earnings after tax of this company?
40 crore.
40 crore. So what is 40 crore into this?
307.6.
And you all know that by now earnings into the P multiple gives you what? Market value. And then what is the next one?
Next
Price
is the
to
price to book value.
book value. And what is the number?
2.82 times.
That
100
into
crores.
100, right?
Yeah.
282 crore. Now we have three values, right?
Yes, sir.
If no other information was given in the question, I would have taken a simple average, adding up all the three numbers by 3. But here, they want a value True Limited taking a weighted average of these values. They given use a 50% weightage for earnings. That means the amount you got for price earnings ratio. The value based on PE multiple. And then equal weightage, the balance 50% equally. That means what? 25% each for sales and book value. Now just see the market value of True Limited. Yes, ma'am.
It is 350.75 into 0.25.
You know that is based on sales, right?
Yeah.
That into 0.25 is a weight plus
307.6 into 0.5.
into 0.5 weightage based on earnings. Then
plus 282 into 0.25.
0.25. Then what you do? Add up all the three numbers. In all, how much you get?
311.99 crore.
Let us say 312 crore is the market value of your issue. So can we find the number of the price per share? You cannot over here because they haven't given the number of shares offered by True Value Limited. Had they given the number of shares offered, I can divide, let us say 311 point blah blah or 312 crore by, let us say they offered 1 crore shares by 1 crore, or let us say some 10 crore will give you what? Value per share. But here you cannot do that. And one small fun fact, okay, which you may not enjoy because examination is waiting at your doorstep. Okay. So what happened? A company, a popular company, where we all spend a lot of time over there, Facebook. When they came with an IPO years, many years ago, their shares were priced at $38. How much? $38 per share based on the price to sales multiple. They took the price to sales ratio of what? Of a comparable firm. in the social media space. Got it?
Yes, sir.
And they got one multiple. Here, how much you got multiple? Price to sales multiple?
Price to sales is 1.40.
They got some multiple. They took that multiple into the sales expected for Facebook, okay, and found the value to be $38 per share. Okay, well, that's only, you know, maybe not relevant for the examination. Okay, guys. So good luck. Bye bye.
Thank you, sir.